Look, I think we can all agree that technology is an incredibly well-loved and well-owned sector. And so anytime you have this much sort of aggressive positioning in one sector, it's going to be prone to these short-term reversals. But one of the big debates in the market right now is between growth and value, and in particular, whether the technology and growth stocks really are going to have to cede leadership to value and kind of more cyclicals. In my view, that's not going to happen in the very near term. We may get these short rotations, but in order for sustained value or cyclical leadership, we're going to need to have a much better growth environment. And we still are battling reopenings and return to economic activity and return to normal. And until we can have a significant and sustained acceleration in the economic picture, I have to say, I think growth and some of these technology companies are going to be the ones putting up the better revenue numbers for the foreseeable quarters.
Yeah, Josh Brown, we hear the word normal a lot, normalization, return to normalcy. What does normal look like to you and your team at Ritholtz when it comes to the economy, to work? What do you see in that term?
Yeah, I think people are dreaming. As I've said repeatedly on the show, I think what's going on with the stock market away from technology much more accurately reflects the condition that the economy is in, which is terrible. And now we're starting to see this level off in consumer confidence. We're starting to see some of that exhilaration of the ride back up to normalcy start to peter out. It's happening in the data. It's starting to happen in different stock sectors. And I think you only have to pick out these two quotes from the two largest banks in America to truly understand what's about to hit the stock market and sentiment. The first one I picked out, this is from Charlie. This is from the CFO of J.P. Morgan, and they did a good job, which I'm sure we'll address. I'd say in the first quarter we were looking at a deep but short-lived downturn. We were focused on the most impacted sectors. Now we're looking at a more protracted downturn. We're reserved for a much more broad-based impact. So now it's not for the large banks. They're not saying, oh, no, airlines and travel. They're saying it's everyone. And that's why you saw them take another $9 billion and push it into their reserves against future losses. A lot of that is the consumer, but then also commercial real estate, et cetera. Wells Fargo CEO Charlie Scharf, same thing. There remains great uncertainty, but our economic assumptions have changed significantly since last quarter. So they're already saying that from last quarter to now, things have deteriorated. That's what's really happening in the economy. Los Angeles told you their schools aren't going to reopen in the fall. That is an economic disaster. San Diego told you the same thing. Now Atlanta is saying it. Won't be long before they start saying it in Texas. That is a disaster. People can't go back to work even if they wanted to, if they have young kids at home, not in school.
Yeah.
So I very much feel all the lights are now flashing yellow. Wake up.